Hello, everyone. Welcome to Cornell Keynotes. My name is Jeanne Varney, and I'm a senior lecturer and the director for the Center for Real Estate and Finance in the Nolan School of Hotel Administration in the S.C. Johnson College of Business. I'm happy to be your host today for today's keynote, Sustainability in Hospitality Accounting. Today, we're discussing the recent sustainability updates for energy, water, and waste in the Uniform System of Accounts in the lodging industry, better known as USALI. We love the timing of this keynote today because this month, as many of you know, April is Earth Month, a time to really raise environmental awareness around issues that affect our planet. It's also when Cornell celebrates all things related to sustainability, from our innovative energy, building, and mechanical systems to our incredible student groups that engage with such passion in the full spectrum of sustainability activities. Thus, we really think it's the perfect time for us to celebrate this new sustainability reporting guidance that can ultimately help a hotel reduce its environmental footprint. Today, I'm really pleased to be joined by Kim Gauthier, a CPA and certified hotel asset manager, and Mary MacAusland, a CPA and professor of practice in accounting and a colleague of mine in the Nolan School of Hotel Administration. Both Mary and Kim are part of the Global Finance Committee that worked to develop the recently released revised 12th edition of the USALI. So just a few notes here. Viewers, we're interested in hearing from you and want to take your questions, so please submit them in the chat. And keep an eye out for resources, tools, and useful links in the chat as well. We have a few eCornell courses and certificates that you may find useful after today's session too. There's Mary's Hospitality Accounting Certificate, where you can learn more about USALI and hospitality accounting. And I also have a Sustainability in Building Design and Operations course that you might find useful. And we'll put those links in the chat too for you. As always, today's live stream is being recorded and it'll be available for you shortly after the show ends today. And then just a note too, in case you don't know, our keynotes are also simulcast on YouTube, LinkedIn Live, and Facebook Live. So we'll share those links in those channels in the chats as well. All right, you ready? Let's go ahead and get started here. All right, so first, today we're going to discuss, for those of you that are new to USALI, we'll begin with a brief overview of this accounting reporting format and some of the recent changes that have been made. And then we'll look to discuss some various stakeholder groups who are using this reporting, and then really try to focus more fully on some of the opportunities and challenges that everyone is really seeing here for, that will kind of come out of these updated guidances. All right. So Mary, let's go ahead and start with you here. Both you and Kim did serve on the Global Finance Committee that developed this revised 12th edition of USALI. So maybe can you please share a little bit about this reporting and your experiences?
Yes, thank you, Jeanne. It's great to be here, everyone. So the first edition of the USALI was published in 1926, and it really was the first organized effort in any industry to establish a uniform system of accounts. And it continues to be unique for any industry to have such a uniform system. The USALI is published by HFTP in partnership with the American Hotel and Lodging Association. And it's really great to see that USALI is celebrating 100 years of setting accounting standard practices across the industry. The 12th edition is my first time on the GFC, and I started on the committee in 2019. And it truly has been a rewarding experience. It's a great group of dedicated industry professionals to work with, and we're all volunteers working together to create this content for the industry. As an educator, I was able to learn a lot more about the lodging industry than I knew when I started, and I'm able to bring this knowledge back to the classroom and integrate it into my teaching. So it's really been a great experience for me and for the students at the school as well.
That's awesome. Thank you, thank you. Kim, how about you? Can you please share a little bit about your involvement and other key aspects of the work for the Global Finance Committee?
No, I'm happy to. And Jeanne and Mary, thank you for having me. Sorry I couldn't be up in Ithaca today, but I appreciate being part of the group. I joined the USALI committee back in 2012, so I had the opportunity to work on both the 11th and the 12th editions. And as Mary said, it's a great group of individuals It's actually evenly balanced at this point in terms of having about a third of owner representation, a third manager representation, and then other industry experts such as professors, people from STAR, et cetera, public accounting, et cetera. So it's been great. It's a great group. I think the thing I wanted to point out was that, the USALI really is based on GAAP fundamentals in terms of how things are reported. It's really a managerial style report in terms of it being something that the industry and industry stakeholders have become accustomed to in terms of how to measure their hotel performance and make improvements. So it's been a great tool over the 100 years. But I think it's important to also note that it does have legal implications. P&Ls and the income statement under the USALI, it's often referenced in material and major loan agreements, franchise agreements, management agreements, et cetera. So the consistency of the reporting and what's included is really what it's all about.
Yeah, thank you. Thank you, Kim. So, I'm really excited to see that the revised edition to USALI is now published. And I think it would be helpful for our audience if we first provided an overview of USALI and its reporting format. So, Mary, do you think you could please give us a little bit of an overview of some of the key aspects of the summary operating statement, plus some of the supplemental schedules of USALI?
Yes, I'm happy to, Jeanne. Thank you. So as we mentioned, it is a unique reporting format specifically for the lodging industry. And as you see here on the statement, it begins with revenues, obviously, and then it's organized by departments. So you see that the direct expenses for each of the operating departments are subtracted, and then there's a total for the departmental profit. Following that, there's 5 undistributed expenses that are subtracted in order to calculate a unique subtotal for the industry called gross operating profit, or commonly referred to as GOP. And these expenses, as you see, include the administrative, marketing, information systems, property maintenance, and then energy, water, and waste. And it's important to note that these are not distributed back to the operating departments, as only the direct expenses are included on each of the department schedules. So we talk about supplemental schedules, and I want to be a little more specific here because each line item that you see on this summary statement is supported by a detailed schedule. And then the bottom line of that schedule is what's reported here. So then following the gross operating profit, you'll have the non-operating items, and then the subtotal for EBITDA, which is for earnings before the interest, taxes, depreciation, and amortization, which is a proxy for cash generated by the hotel. So there are a number of different stakeholders involved with any given hotel. So we have 2 versions of the summary operating statement. And what you see here is for the operator. And at the very bottom then, you see that there's a replacement reserve that's subtracted from EBITDA to reflect what is understood in the industry as the operating income of the property. And this number really drives a lot of the decisions that are made about the operation of the hotel and the property itself. A separate statement, which is very similar to this one, it's only a little bit different at the bottom, is for the owner of the hotel. And that's where you're going to see deductions for the depreciation, the interest, the taxes, to arrive at the net income of the entity. So we have these different summary schedules and then independently summary supporting schedules with all the detail.
Great. Thank you, Mary. So, you just alluded to sort of the fragmented nature of the lodging industry, which is really important, I think, for our viewers to understand. So, Kim, could you please explain, sort of who those stakeholders are, share a little bit more about why there are 2 schedules, one for the owners, one for the operators there, and then, if you have any other thoughts, related to your experience, really as a leader in the asset management field, kind of what insights you might have related to that.
Yeah, no, thank you. I appreciate that. So, I think it's important to note that prior to the 11th edition, the committee that was responsible for USALI didn't include the owners. It was only made up of the brands as well as some of those other industry stakeholders I talked about before. And I think it's important that the owners be part of it, which I'll touch on in a minute. I think from a context and a lay of the land perspective, it's important to note that major brands like Marriott, Hilton, they don't actually own the hotels. They're simply the franchisor. When the industry kind of kicked off for 30, 40 years ago, the brands were in the ownership business of real estate. And as they've evolved over time, they've evolved more into branding companies, and they don't own as many of their assets as before. So that means the assets are owned by individual investors, groups of investors, private funds, public funds, et cetera. And the owners make the decision in terms of what the life of the hotel is going to be, and kind of puts the puzzle together of what the brand should be, based on the metrics of the market, et cetera. The brands definitely bring value. They bring loyal customers. They bring the operating framework, the systems, the standards, reservations, et cetera. And all of those things do come at a cost, as any franchise would. But I mean, ultimately, the P&L and the operating results of the hotel really belongs with the owner. As Mary alluded to, the cash flow, the operating statement for the operators is probably the most heavily relied on by most of the stakeholders in terms of references to net operating income and GOP in some of those material agreements that we talked about. But I mean, at the end of the day, the cash flow from the hotel and the piece of real estate, it's making mortgage payments. It's, allowing the owner to have excess cash to make capital decisions and provide returns to investors. So when the owners got involved in the 11th edition, anybody who's been around for a bit of time probably knows that the 11th edition was quite substantially changed from what it had been before. And it's the owner of involvement that led to the substantial changes in the 11th edition, and really transformed the industry in terms of the collaboration across all the groups. So we got the brands and we've got the owners, and then the third interesting stakeholder within this industry is the management company. So the management companies are the ones that run the hotels and employ the employees and take care of things on a day-to-day basis. Brands do manage, owners can manage, or you could have third-party managers that are out there that just do management of hotels, and that's their expertise. So it's quite bifurcated. That's why I have a job as an asset manager representing the owner. But as I said before, it's really that owner, it's really the operating statement for the manager that everybody really uses to make decisions on. They use it for benchmarking, et cetera, et cetera. And I think that I was saying before, I don't know whether other types of real estate do that deduction for FF&E reserve. But anybody who knows the hotel industry, it's probably one of the most capital intensive industry real estate classes out there because of the need. We replace furniture every 15 to 20 years, carpets every 7. I hear that like airports do it every 30. So it's very capital intensive, and keeping a brand and staying compliant with their requirements and representing the brands, that's one of the costs that it comes with. So it's really expensive for us to own the hotel. It's very, very complicated, but I love it. I think it's so much fun.
Absolutely, I agree. So let's shift a little bit and start talking about the energy, water, and waste changes here. So, having also worked myself in the industry as an asset manager for many years, I'm especially excited about the new guidance here, and the metrics that have changed here for energy, water, and waste. So, Mary, could you please provide us with a brief overview of this new guidance as it relates to this new reporting?
Yes, absolutely. And as you can see on the schedule, one of the undistributed expenses is for energy, water, and waste, and it replaces, the old title of utilities. And now you see a new Schedule 9 on your screen. And this includes the new required reporting that is designed to assist stakeholders in assessing a hotel's environmental impact, which may ultimately lead to increased profitability and help to reduce a hotel's environmental footprint. And that's really the goal. And that's why we're excited to be here in April, to really be bringing some awareness about this, to make sure that you know that our industry really has been at the forefront of this reporting. Prior to in the 11th edition, USALI reported the waste removal as a single line item on the property operations and maintenance schedule, which was one of the other categories of the undistributed expenses. And here you see now on this schedule, this new Schedule 9, you see it is a major category of its own. It's becoming commonplace for meeting planners and cities to request these types of statistics, and this new guidance will meet this need by monitoring and tracking the costs associated with energy, water consumption, and waste production. This new schedule replaces the prior Utilities Schedule 9, which did not break out any of the expenses that you see here. So here's the old schedule, where it was just basically listed singly without really the major categories that you see. And now we can really look to compare the old and the new, in the next slide that you're going to see. Which shows how the new Schedule 9 has changed from the old Schedule 9 of utilities. And what you see specifically then on that schedule is that waste removal is reported in much greater detail and has many subcategories. And you see with this comparison, categories for landfill or incineration, recycled waste, composted waste, and other diverted. And I love this other diverted category because this really goes to the operations of a hotel, because it includes the cost of waste that's diverted from landfills. That could include the disposal costs of donating such items as excess food from the restaurant, old furniture. As Kim noted, hotels update their FF&E, which is furniture, fixtures, and equipment, pretty regularly, and gently used toiletries and other assets that they can donate that don't go into the landfill. So it really is quite a jump from the old schedule to the new Schedule 9, and it's exciting that our industry is really at the forefront of beginning to collect this data.
Yeah, it's really exciting. I totally agree. So Kim, what do you see changing now with the new energy, water, and waste guidance?
Yeah, I think Mary did a great job reviewing the schedules. Clearly the additional detail, it shows a lot about where we are in the world in terms of the different ways that we get energy and water, et cetera. I think it's more inclusive in terms of what we've done in terms of moving everything into this one schedule. But I think probably the biggest change is that statistics are going to need to be reported, and that makes it a requirement in our financial statement reporting to have that statistic measurement. And I think it's interesting, the capturing of the statistics in addition to just the dollars, is a trend that global companies seem to be going towards. I took a CPA, a continuing professional education class in the last 2 weeks, and it was really talking about how the accounting profession is preparing for the need to include the capturing of statistics in a fair, consistent, meaningful way, just like they do financial reporting. They feel that that's going to come on the accounting department, and as we go forward. So it's really an evolving type of thing in terms of what's happening. I do think that if you look more specifically at the table itself, there's calculation that's pretty consistent, as an owner or an operator, to look at things in terms of calculating things on a cost per occupied room, et cetera. But there's other things you can see in terms of the way things are measured, in terms of per units or total areas, et cetera. And it's just a different way of looking at and preparing for the environmental changes that are coming down the pike across the world.
Yeah, thanks, Kim. So let's take a little bit of a deeper dive into the stakeholders here. So I'll first, start talking about brands here. I think the brands actually are really excited about the new USALI energy, water, and waste updates here. You know, as Mary just showed you, and Kim, you talked about as well, there'll now be greater levels of detail in the energy, water, and waste reporting. And I don't know a single person that works in, you know, any of our stakeholder groups that doesn't want more data, right? So the more data we have, the better we can manage and understand, you know, what is happening in our hotels. So, you know, although we don't really necessarily think that these new reporting metrics are going to kind of trigger anything like new brand standards, which are requirements from, you know, the brands to their franchisees, we do know that the brands are interested in this data and they do have a lot of practical uses for it. So, you know, what kinds of ways do we think they're going to use it here? So, for example, let's look at, you know, brands. They do themselves an enormous amount of benchmarking. And we know benchmarking is really that classic analysis tool that's used to understand a hotel's operating performance. You know, and it helps identify areas where they can help their managed hotels and franchisees optimize their performance. So, you know, from these learnings, they would actually typically take this information and kind of pull together improvement strategies and form best practices for their franchisees. You know, one of the great things about affiliating with brands is they have incredibly extensive repositories of best practices that really benefit everyone affiliated with their brands. And so having access to this new data at a higher level of detail can help the brands prioritize the areas that they want to support with strategies and recommendations in energy, water, and waste areas. So another way that the brands will probably use this data is to answer questions that they get from their external stakeholders. Brands are constantly getting questions, you know, all the time really from their investors, sometimes from Wall Street if they're public, their franchisees, and even customers that was mentioned earlier about, you know, sustainability metrics in their brands. And so they'll now be able to answer those questions in greater detail, not only really about energy, water, and waste, but really exciting now for the first time to be able to talk about renewable energy sources and waste diversion. You know, and so, you know, I'll note too that, as was mentioned earlier too, that the brands do sometimes manage some of their hotels. You know, they have a management company arm, and that data becomes critically important. And Mary's going to actually talk about that here in just a moment here when she talks about her stakeholders. And last, you know, sometimes that data will reveal cost savings or ROI opportunities for hotels that, you know, they sometimes require an additional investment, you know, from a building infrastructure perspective. But those capital investment decisions aren't really within the control of the brands. Those decisions then fall on the shoulders of the asset managers and the owners. So this is where I'm going to pass it back to you, Kim, to talk a little bit about, you know, how owners and asset managers will have a new perspective on using this data. So what opportunities do you see?
Yeah, no, I agree. And thank you. I think, you know, I wanted to just like really quickly, like the way that we developed the schedule for the 12th edition, you know, members of the committee talk to other people in other industries to set what these frameworks are for these statistical reporting. So we believe that we set it up in terms of where things will go and where other experts in this EWW field are going. So I think that's important. I mean, I think as the owner, our job is to, you know, maximize profit, maximize that, which and drive overall value, and to be able to take the benchmarking a further step and compare similar size hotels, you know, like different types of buildings across different real estate classes to be able to benchmark within a different market, an 80-room courtyard in multiple locations, what's working, what's not working. I think what it does is it gives data is king now, as everybody knows, and it gives owners the ability to look at where they have the ability to put capital investment, you know, things that are behind the scenes like boilers and HVACs and things that cost money and they're expensive and they're important investments from a building operation standpoint. they're needed, and whether you can gain efficiencies based on your benchmarking by either making repairs or making full-on replacements, bringing in new technologies. I think there's a lot of information, and there's a lot of ways that we can use it from an owner perspective to enhance the value of our assets. I think the thing that concerns me the most is that is with everybody kind of going to this, not just hotels, is regulatory, agencies and jurisdictions also wanting this information. There's some jurisdictions I know that are capturing this information, and usually when jurisdictions capture information, it's almost like some sort of a tax or a fine or some other cost to the owner and to the real estate. So I would say that that's my concern about it, is what happens with that. I mean, because if you look across the industry, we have assets that are 100 years old and legacy. I call them old Grand Dame hotels, like the Waldorf Astoria in New York, or you have brand new, Hampton Inns and et cetera, et cetera. And the profile of those from an energy perspective are very different. And I'm very concerned what the jurisdictions could potentially do with that information. It could cost us. It's a risk. It's a risk overall for real estate going forward.
Really, really good points there, Kim. Thank you. Thank you so much. So, Mary, how about if you could take a few minutes to talk about the managers or the operators of the hotels? How do you think they'll use this new data?
Yes, happy to, Jeanne. Thank you. Really, it goes back to what we started talking about, where the operating statement and the operators of the hotels really are the key aspect of the industry, because they're the feet on the ground. They're in the hotels, they're running the hotels, they're managing the actual costs and the P&Ls. They see the trends, the spikes and the dips. And to really have this new data, to be able to manage waste production and electricity and water use, it's really going to allow operators to bring new ideas back to the owners about how to save money and really understand how these costs are being generated. I mean, if you don't capture the data, you can't make decisions. So that's really what's going to be really great for managers, to have this new data. And, really to see where the usage is. So if you go back to the summary operating statement, we had the couple of departments shown for the rooms and F&B, but the reality is that the hotel, oftentimes if it's a resort, it has a golf course, it has a spa, there's other operated departments, and we aren't allocating those costs back to the individual departments, but to really be able to see where that usage is, and then to develop strategies to manage and reduce the costs, to improve the margins. Because without the data, again, you're not seeing, what is actually happening. So managers are just really going to have more data to do cost analysis and understand how these consumption, the waste, the water, the energy, et cetera, is being incurred based on various levels of occupancy. And the impacts really are not just accounting, because it really is about strategy. I mean, again, having the data, as we talked about, it's going to take a few years, though, and this is a little bit of the downside, but we're celebrating because we now are starting to collect the data. But we're going to have to wait, for a few years until we begin to see a bit of a trend analysis year over year, so that we can really start to do the benchmarking. So the initial reporting years that we have is more of the gathering and how owners can begin working with the operators together to really look at how to drive overall value. So as Jeanne mentioned, if we really go back and look at this, these key stakeholders and how they're each going to use the data, the new guidance isn't really going to trigger new brand standards, but it really is about best practices, and it really is about, the emerging benchmarking opportunities that are going to come from this data. And what I love about the industry and my work on the GFC is that you have all these different stakeholder groups working together, because it really is at the end of the day that everybody wants to improve, the profitability and the service and reduce the hotel's environmental footprint. So I just think it's a win-win-win, for everybody. And I see many more opportunities for these different stakeholder groups to really come together, for the benefit ultimately of the guest at the hotel, to improve the experience.
Great, great.
Yeah. Jeanne, do you mind if I add really quick? No,
Please,
I
please.
think that, to kind of close the loop, you had alluded to ROI and having, as the owner, being able to say, oh, maybe I can improve my energy and improve NOI as part of it. But what if it can go the other way? Brands or vendors saying, well, we're going to be able to reduce your electric usage by this amount by putting a motion detector in the room. Those types of companies are now going to be held accountable for whether their stuff is working or not, right? In terms of, and so it's not just an ROI, it's proof of concept for things that have evolved in the industry and things that are coming out that I think could be interesting.
Thank you for adding that. That's a really good point. Absolutely something that's going to be a consequence of having the ability to be able to more minutely look at this data for sure. As we're sort of getting ready to wrap things up, I was wondering, Mary, if you would just take a few minutes to tell us about one of your recent experiences, because it's such a cool story for you to tell about how accounting is really starting to help drive sustainability. And it was a student competition that you were recently involved in. And so it's a great story about us being able to involve our students, you bringing your accounting expertise in, along with an international organization that you affiliated with. Just briefly, if you could tell us just a little bit about that experience.
Yes, absolutely. Thank you, Jeanne. I'm so glad we have time to talk about this, because last year I was able to coach a team of Cornell students in the Accounting for Sustainability International Competition. And that organization was established by His Majesty King Charles in 2004 to really help transform finance and accounting to make sustainable business as usual. And that really is their key mantra, and that, you want that at the forefront. And that's why I'm so excited to have been part of the GFC, with the new EWW standards, and see us moving forward with it as well. But the group of students that I got to work with did an amazing job. They ended up studying a company and looked at lightweighting of wine bottles, which I was amazed how much we uncovered, and the research that they did about the environmental impact of making glass. And the bottom line can be enhanced for the company that makes this glass by having lighter wine bottles. And it was just really informative. The students were so motivated. It was really a great experience to be able to work with them and with this competition. So if you don't know about the organization Accounting for Sustainability, we can put the link for that organization into the chat. Definitely would like to see more U.S. colleges and universities get involved in the competition, because it really started again in England, and there were about 30 schools that were participating. So I know it was a great experience for the students.
It's great, yeah. I talked to some of the students too that were involved. They loved it. They were, again, super passionate about sustainability, and had an opportunity to really approach it from a different perspective. Mm-hmm. So thank you so much. So it looks like we are actually a little out of time here. I'd like to thank you both, Mary and Kim, for joining me today, sharing all your great insights for the new USALI revision for energy, water, and waste. It's exciting again to do this in the month of April, Earth Month. Again, all the incredible activities we have going on in campus we really have them year round, but especially we celebrate in April as well. So kind of on a closing note, it's really exciting to see how the industry has taken this important step to really drive forward environmental sustainability efforts by using this new level of detailed reporting. And so, a reminder, check the chat for, tools and resources for, our courses and certificates there for you. And, thank you again, all of you, for joining us, and, have an awesome day.
Thank you.